What is up, everyone? It is I, Carlton Flowers, your crypto pro.
Yay!
And today we have a triple rollover warning on Bitcoin. Yes, indeed. This is a very unique situation where there are three charts that all agree with the same indication of letting us know what could possibly happen with the price action. So before we get started, I must remind you that this is absolutely not financial advice. I'm simply giving you this information that you can chew on, make your own decisions if you are trading, but this isn't trading advice. I'm just showing you something that is playing out on the chart, and I'm not trying to tell you that I have a crystal ball, because the market can change on a moment, just like that. Even when all indications are pointing to one direction, things can get turned upside down. But with that, let's just look at what these three charts are telling us and why I am issuing this warning. We are starting out with the Bitcoin 4-hour chart. So as we can see on this chart, we have 1, 2, 3, 4 red candles, and we have a rollover on the stochastic. This is part of the triple warning. So looking at the stochastic, of course, we have the bearish crossover, and this is going in the downward direction. All right. And then let's look here on the MACD, which also looks bearish, as we have switched from the solid green on the histogram to the light green with an impending crossover of the lagging oscillators of the MACD. Now, combine that with, we had the peak back here and an overall downward direction. I talked about this on the last Bitcoin video. So that's the 4-hour chart, which says that we're headed down towards this 200 EMA line. But notice there is a slip zone, and that means that we are about to fall off of this great big volume node here on the VPVR, where there are a whole lot of trades that have happened in the past at this price point. That means the automated trading bots like this price point for buying and selling. But below that, you see volume tails off, and there are not as many orders here, which makes a slip zone. So what happens is, if we fall into this slip zone, we either rapidly go down or we rapidly get snatched back up. If we get snatched back down, we will go to this point of control price, possibly at 38,000. Okay, so that is a short-term bearish chart here on the 4-hour. So let's move on to the 1-day chart and see what it says. This is the second piece of the puzzle, and this chart also looks very bearish. Why does it look bearish? Well, first of all, as you will notice, there's a nice red candle forming right here, which states that we are moving downward, and notice that it wicked up, okay, and now we are at the bottom of this candle with no wick. So that means that when the price opened, we went above and then came below, and it is a red candle because we're below the opening price of this candle. There is no wick below, so that says that there's no momentum snatching price back up, but we're at the bottom of the candle and dropping. So currently we're sitting at this volume node right here at the current price, just below that volume node of 48,847 being the current price. And if we fail that, which we probably will, we're going to be looking towards this 50 EMA and maybe this cluster of the VPVR, where there's a very big node at the price, which happens to be 37,000 and change. If we fail that, there's another node below at 34,000, where the 200 EMA magically will probably intersect. Okay, so if we just pull this up, it would look something like this, and we could meet up the 200 EMA at this volume node. The reason why I think that it is going to continue in this direction is because of the stochastic. Look what happened here. We had the peak. We went down, we had a fake out right there, and it crossed over bearish again. We had another fake out. It rolled over, crossed over bearish. We had another fake out where it looked like the fast line, the blue line, was going to cross over, and it opened back up. Notice that the blue line fell off. And now both the blue line and the red line of this oscillator set is moving downward at a steep angle. Now, what does the MACD tell us? We already had a bearish cross right there. And the blue line, the fast line, is equidistant, falling away from the orange line, the slow line, which says that momentum is still headed downward. Now, the fake out gave us this one little light red bar on the histogram, but notice that it went right back to solid red. What does that say? It says that the momentum is headed downward. So we are we were trying to get back to this zero line here, but now that we have this solid red bar, it says we've gone back to falling away from the zero line. So that means momentum overall is still going in the downward direction. So that concludes the one-day chart, which is bearish. The one day confirms that the 4-hour is falling within a bigger picture that is falling. Now, it would be different if we had a bullish cross or bullish momentum here. That would mean that the 4-hour is going down, but it's probably going to eventually come back up again. But the 4-hour is bearish and falling. The one day is bearish and falling. Let's combine that with the last chart, which is the 1 week. And this is why I give you the triple rollover warning, because all three of these are saying that price is going to roll over. Now, this is the nastiest one right here. So overall, the momentum and the oscillation of the 4-hour chart, meaning going up and down, up and down, up and down, is overall trending in a bearish direction. The one-day chart says the up and down is trending in a bearish direction within the 1 week chart that shows us this big, nasty crossover right there and a rollover of the stochastic. This says that we have completed the cycle up after the big, strong move all the way down from nearly 25,000 up to the high point of 45,000. This wave is done. Okay, it doesn't mean that it's 100% done for sure, because sometimes you will have the stochastic come back up and stay up here. Okay, it can happen. However, when we look at the MACD downstairs, it looks like it's already close to a peak. Look at this. It's already up high. And it looks like the blue line is starting to curl over as it wants to find the orange line. Now, will there be an impending crossover, that MACD? Well, there's one indication that says it's coming. And what do you guess that indication is? Well, if you said we changed from solid green to light green, you were correct. So it looks like the momentum is falling and headed towards the zero line. All right. So once we finish this wave up here, we started to come down. Then we hit a wave up, and now we're starting to come down again, because what did we have before? Let's just look at it. You had this nice trend here, a wave up. Nice trend here, wave down, and came right back up. Now this set could be completing and going back to the zero line. So what that means is there is a possibility that we could have a final correction. And I've been saying this for months, that I thought that we needed one more nice downward trending trading channel on the 1 week before we start the bull market, which I don't think is going to start until the year 2025. So here we are. we're not even into 2024 yet, and people are talking bull run. And so I'm thinking that this indicates that price will trend down and maybe find that black dash line and catch this volume node at around 30,000. There's other people who are thinking that 30,000 could be the bottom of this correction, and then we start to move up again. But we'll have to wait and see how severe the correction happens if it plays out. I do say if. So unlike some of the other big mouths that run their yap on YouTube who think they know everything, I don't. I unfortunately don't have a crystal ball, and I can't predict the market, and all I have to go by is the momentum from the charts. We're just reading the chart. That's all. We don't have to call it technical analysis, because we all know what happens whenever we make comments about technical analysis. You get the nitwits and the danderheads that come out of the woodworks. Technical analysis doesn't work. It's just a bunch of crap. You know it. They're coming. They're coming. So all we're doing is just reading the chart and getting a feel for what's happening. And we, again, are kind of just checking out the waves. You remember the video that I did on the waves? If you didn't see the waves video, I want you to go back and check that out. And what I was saying in that video is that you can kind of track price movements as they happen in waves. So what are we talking about here? Well, let's look at a wave that happened. We had a wave down. Here's the trough of that wave. Then we had a wave up. And then we had a slight wave down and a major wave up. And so what's next? We're probably going to have a wave down. And then we match those waves with the stochastic. So when we had this wave up here, it came from this stochastic peak. We had a wave down, it matched this bottom, the trough of this stochastic. Then we had a wave up, which matches this stochastic peak. And a nice lengthy wave down that matches these bottoms right here. There was a triple bottom that comprises of this trough that happened right here. What happens next? A wave up, which matches this stochastic peak, and this stochastic peak. So these waves got a little bit more calm, and then we had the major wave down here, okay? And at this bottom, what did it make? It made a higher low. So we went from this low here up to this low here. And then the major wave up, here it is, that brought us to this higher low, right? Or higher high, rather, right there. Now we can expect another wave down. And our question will be, will this one-day stochastic make it all the way down and complete a cycle without getting hung up and staying up here in the top? Normally, we stay in the top when we have extended long moves. We had this triple dip up into the overbought zone whenever the stochastic decided to poke its head above the 80 line 3 times. We had an extended wave down when the stochastic decided to dip its head down into oversold below the 20 line 3 times. Okay? And you know what I always say, it's once, twice, 3 times a lady. Okay, that was bad. All right. And anyway, we might get this complete wave down if we don't have a triple top at the above the 80 line right there. Okay, so let's review. Let's just jump back and review the triple rollover warning. We had rollover number 1 on the 4-hour. It's going bearish. So there will be a cycle down and then back up and back down. Okay, and we're starting a cycle down. Next, we had the one-day chart that has already rolled over, and the fast line is falling away from the slow line. There's a bearish crossover on the MACD, which says we're still in a wave down. Now, on this one day, it could come all the way back up to the top, okay? But that would happen within the overall positioning of the 1 week stochastic, okay? So this is falling off, and we might have a return to the top of the stochastic peak on the 1 day chart within the overall movement downward. That's when you start to make lower highs as you range down and switch the parallel trading channel from up to down. Now I'll end with that. Let's look at the parallel trading channel. Let's draw it on the chart so you understand that clearly. Here it is, right here. This is a trading channel. It's going up. And if we roll over, as per this triple rollover warning, that means we change to a new parallel trading channel, and price is going to pivot, and we start to bounce around in a channel going downward. Much in the same way you had this channel downward here. You had this channel downward here. You have a channel downward here. This is all that happens, okay? And whenever you switch from one channel down to a channel up, like we have here, okay, what do we call that? We call that a swing channel pivot, okay? So that is what happens whenever you go from a downward channel to an upward channel. You get this little area here, that's your pivot point. Here's a pivot point. There's a pivot. There's a pivot. Here's a pivot here. I didn't draw those in, but you get the idea. We had a pivot here, and this could be our current pivot point. So that's what you have. I would like to know if you believe that we will make it all the way down to the black dash line or the purple dash line, or could we possibly make it all the way down to the red dash line? Oh, that would be scary, folks. It would be so scary, but we'll have to wait and see what happens. Right now, I'm thinking that chances are that 30,000 or this big volume node right here will be the pivot point where we continue on upward, and then after that it would be the purple dash line, and then worst of all would be the red dash line, okay, in descending order of probability. Okay, does that make sense? Hopefully this has been very simple, and let me know if this chart reading and wave analysis is understandable to you and if it makes sense. And then let me know what you think the Bitcoin bottom will be and if the alts are going to follow along. Stay tuned because I will have some micro cap picks coming your way and some small cap picks that we can swing trade to gain some fatness in our bags as we're getting prepared for the overall bull run of 2025. That's about all I've got for now, but I would love it if you would like, comment, and subscribe to the Crypto Pro channel. And if you would like to help support my efforts in producing these videos, you may do so with the giving of a super thanks. And I thank you in advance and look forward to other ways that you can help support the channel coming soon, which would be the merch that I'm designing and also my micro cap picks. Then I will sell you a bag of picks, and I'm starting to kind of change my mind. I was going to sell a huge load, give you like 30 picks for maybe $300, but now I'm thinking maybe give you a handful of manageable picks, ideas. These are just ideas that you can trade on. Maybe give you 5 picks for say $50, $75, or maybe 1 to 2 picks for, $30 to $50. Let me know what you would prefer, and you will be purchasing the work that I did to dig these up and to put them into a spreadsheet that gives you all of the due diligence, all of the information that you would need to make your own educated decision on what to get. Okay, so I'm done here. This is Carlton, and I am out.